All right, welcome back. Today, we're diving into the earnings call for Rubrik, ticker RBRK. And let me tell you, their Q2 fiscal 26 results have presented us with a real head-scratcher.
So let's just get right into it. The mystery. On September 9th, Rubrik came out and delivered what you can only describe as a massive beat-and-raise quarter. I mean, this is the stuff investors dream about, right? But then what happens? In after-hours trading, the stock just tanks. It sells off immediately, dropping more than 5.5%. What gives?
So yeah, that is the big question, isn't it? Why? Why on earth would the market punish what looks like a totally flawless report? Well, that's what we're here to do. We're going to act like detectives. We'll investigate the evidence from the quarter, listen to the testimony from management, and see if we can figure out exactly what it was that spooked investors.
All right, first things first. Before we get into any theories, we have to establish the facts of the case. And the facts, well, the facts are that Rubrik's Q2 results were, on paper, nothing short of exceptional. Let's start with the bottom line, the earnings per share. Rubrik posted a non-GAAP loss of just 3 cents a share. Now keep in mind, Wall Street was expecting a loss of 35 cents. That is a huge 32-cent beat. I mean, that's not just beating expectations, that's blowing them out of the water.
And it wasn't just on the bottom line. The top-line growth was just as explosive. Revenue came in at nearly $310 million. That's 51% growth year over year, and it completely crushed expectations, which were sitting way down at around $282 million.
And this next number, wow, this one really shows the operational leverage starting to kick in. The company generated over $57 million in positive free cash flow. Now, to put that in perspective, just 1 year ago, they were burning $32 million. That is a massive reversal, and it's a huge proof point that this business model is really starting to scale.
So look, when you just line up the headline numbers, it's impossible to see it any other way. This wasn't a small beat, it was a total blowout. Revenue beat, non-GAAP EPS, massive beat. And then there's subscription ARR, that's annual recurring revenue, a super important metric that jumped 36% to hit $1.25 billion. The evidence is just overwhelming. This was a fantastic quarter.
Okay, so if the numbers themselves are flawless, what's the next step in our investigation? Well, we have to look at the testimony. What story did management actually tell investors on the earnings call?
The core of their story comes from the CEO, Bipul Sinha, and his argument is pretty powerful. He's saying that the world has basically changed. The mindset in IT and security is no longer let's prevent a breach, now it's let's assume a breach is going to happen. It's inevitable. And you can see how that massive shift in thinking makes Rubrik's whole mission, rapid cyber recovery, more critical than it has ever been.
And they are absolutely positioning the entire company around this new reality. It's not just about being the leader in cyber resilience anymore. They're making a huge push into enterprise AI. They even acquired a company called Predibase to speed things up. And they just launched this really cool new feature called Agent Rewind. Get this, it lets companies literally undo mistakes made by their own internal AI agents. Pretty wild.
And look, this isn't just talk. This whole story is backed up by some serious execution. For the 6th year in a row, Gartner named them a leader in their field. They're landing massive customers. We're talking a Fortune 50 pharma company where they kicked out an incumbent vendor that had been dug in for 20 years. It's clear they're innovating fast, and the market is definitely paying attention. So at this point, the evidence seems bulletproof, right? The testimony is really compelling. So that can only mean one thing. The clue, the reason for this stock drop, it's got to be hiding in plain sight. And that means we have to look at the forward-looking guidance. And here it is. This is where things get really interesting. Remember that incredible negative 3-cent EPS they just posted for Q2? Well, for Q3, management is guiding for a loss of 16 to 18 cents per share. Sequentially, from Q2 to Q3, that looks like a big step backward in profitability. And this, right here, is almost certainly the smoking gun. This is what triggered that after-hour sell-off.
But wait, because the plot definitely thickens here. While that Q3 profit guidance looks pretty weak on the surface, management then turned around and confidently raised their targets for the full fiscal year. They bumped up their forecasts for both revenue and, this is key, for free cash flow. So what does that tell us? It suggests that this Q3 dip isn't a fundamental problem, but probably has more to do with the timing of investments.
Okay, so we've reviewed all the evidence, we've heard the testimony, and we think we've found the crucial clue in the guidance. So it's time to put it all together and deliver our verdict on Rubrik.
Here's our take. We believe the market's reaction here is incredibly short-sighted.
It's focusing on one single data point, that Q3 guide, while completely ignoring the much bigger and, frankly, more important picture. For that reason, we are initiating coverage with an outperform rating. So, why are we so bullish when the market is spooked? Well, here's the bottom line. The market is getting hung up on what we think is just a conservative quarterly EPS guide. And by doing that, it's missing the incredibly powerful long-term story. That free cash flow inflection? It's real, and it proves the business model works. The core business is clearly taking market share. And all these new AI initiatives, like Predibase and Agent Rewind, you can almost think of those as a free call option on a huge future market.
So, if you agree with this thesis, how might you think about acting on it? Let's walk through a potential trade idea, and of course, just a reminder, this is purely for educational purposes.
Okay, so after a big drop like this, options volatility tends to spike, and that can create some interesting opportunities. One strategy a more sophisticated investor might look at is selling cash-secured puts. So what does that mean? It's a way to collect income, a premium, up front. You're basically getting paid to wait. If the stock drops below the price you set, you get to buy the shares at that lower price, which, if you're bullish, is an entry point you wanted anyway. And if the stock stays above that price, you just keep the cash you collected up front. Win-win in a way.
So, when you step back, it really does feel like the market sold the news. It fixated on a single tree and completely missed the forest. The big question now is, will those powerful, long-term trends in cybersecurity and AI eventually force investors to re-examine the evidence? We think so. And as always, a final reminder, this is not financial advice.